So people always ask me, can you actually make money out of cryptocurrencies? And in short, the answer is definitely yes. But you can also lose money from that too. I'm going to show you 3 ways to go about doing it. Each way carries different levels of risk, and again, I'm not a financial advisor, so it's not financial advice, but I'm just going to show you the basics of how you can do that using 3 different platforms and 3 different ways that you can make money, and some of those can be extremely lucrative. Now, I've made thousands of pounds over the last few years just from buying cryptocurrencies, but I've made even more from that through trading, and I'm just going to go over that just very briefly with you now. So if you're looking to purchase cryptocurrency for the first time and you're unsure of where to go, and the best place I would say would be Coinbase. It's been around for a very long time, extremely trustworthy, and it's seen as the gold standard really of buying and selling cryptocurrency for fiat currencies such as pounds and dollars and euros. So it's as easy as setting yourself up an account. Make sure that when you do, you get through to the Coinbase.com website. I will leave a link below for you to click on, because there are fraudulent accounts that look like this but actually aren't, and are simply just going to take your money. So be certain that you are at the correct website. But again, there are links below if you want to follow those links. Now, it's as simple as setting an account up, going to trade, and finding which currency you want to purchase. In this instance, there's Bitcoin, but there's a number of different assets that you could choose from, and the good thing about Coinbase is that they're very eclectic in the assets that they choose to promote and sell. Now, if you're new to cryptocurrencies, just to let you know, there are thousands of different cryptocurrencies, and the vast majority of them are basically worthless. Now, with every investment it carries risk, and I'm not a financial advisor, so this isn't financial advice, but as far as Coinbase is concerned, because they have a very eclectic mixture of cryptocurrencies here, they've gone through a certain amount of vetting to decide which of these are the most likely to continue with a growth in value, because not all coins do that, and there's no guarantee that these ones will either. However, the ones that they've chosen to promote and sell generally have a good risk-reward ratio. So like I say, it's as simple as going to the trade button. For this tutorial, we will choose Ethereum, and we will decide how much Ethereum in pounds we would like to purchase. I've already set my bank up to go through this, so I could decide to spend £100 of Ethereum, and it would give me £100 of Ethereum. Now, if I was to do that, that would be go straight through to my wallet, and my wallet would be in my portfolio. I don't actually have anything in here because I use my cryptocurrencies to trade with on other platforms, but I do generally buy most of my cryptocurrency, as you can see, from Coinbase. I send it out to other wallets quite frequently, as you see. And you will see that here, and with every day that goes by, if the market is good, you will see your pound increase in value, because the amount that you purchased of any of these cryptocurrencies would stay the same, but due to the inflation of the coin, your fiat currency would increase in value. And again, with investing, it does take time, and it depends on the market cycle that you've purchased it at. You could be very unlucky and buy it right at the very top, at the very end of a market cycle, and just see your investment decrease in value. But patience is usually the best course of action with any investment, so be prepared to wait out several years before you see any substantial returns. But in looking at previous market cycles and the history of the majority of these cryptocurrencies, they have increased in value astronomically. And we can just have a look on the home page, and we'll have a look at what's been going on recently. So Bitcoin today is, if you bought your Bitcoin yesterday, if you had $100 of Bitcoin, you would have $102.55 today. With Ethereum, if you bought $100 yesterday, today you would have $112.12 today. So you can see that on a daily basis these do go up quite a lot, but this is a good day, and they don't necessarily, you don't have days like this very often. Well, you do actually have them quite often, to be honest with you, but you can have the exact opposite of this, where everything will be down quite dramatically. And again, with investment, especially in a volatile asset like cryptocurrency, it can go up and it can go down quite dramatically. But again, depending on the type of the stage of the market cycle that you bought it at, depends on how long you have to wait for any substantial returns. There are a number of different things you can do to work out your market cycle. There's so many YouTubers out there, including myself. You can follow people on Twitter, and they'll all be very happy to share their knowledge and experience and let you know the state of the market at the time. But again, for investment purposes, any investment needs time to grow, and with cryptocurrency, it's no different. Now, another way you can make money with cryptocurrency is through trading it in what's known as spot trading, and you use a variety of different exchanges if you want, but the biggest and the best one would probably be Binance. And again, you can Google Binance, but otherwise you can follow the links below and set an account that way. So once you've got your account set up, it looks like this, and it's essentially a trading platform, and it looks very technical, and to be honest with you, it kind of is a little bit technical. You have a trading view chart here of whatever asset it is that you want to buy and sell, and you buy and sell it using other cryptocurrencies. So unlike buying and selling with your fiat currency such as pounds, even though you can do that in Binance, it's more commonly used to exchange cryptocurrency to cryptocurrency. So like forex trading in traditional markets, it's the equivalent of that within cryptocurrency, and it can be extremely lucrative by doing that if you kind of have a little bit of knowledge about what you're doing, whether that's trading or you have researched the fundamentals of a coin. You can do quite well just out of exchanging one coin to another and backwards and forwards like that, without any risk of losing. Well, you can lose your value in your fiat currency, definitely, but you would always be holding the tokens that you've purchased. You wouldn't lose everything to a zero. You would always hold those tokens, whether they be more valuable or less valuable. You will always hold those tokens. So you can trade in a number of different ways, and like I say, very much like forex trading, the most common would be to trade using Bitcoin as the native currency. So let's have a look at that on here. So we could purchase ADA for Bitcoin, which is BTC. So we'll have a look at that. That's if you can see here that the change would be 0.31% up in favor of ADA to BTC. So you would be making money if you had made that exchange ever so slightly. But you can also see, given the big red numbers here, this really does show the cruelty of cryptocurrencies if you don't know what you're doing. So this is more of a trading platform. It gives you a lot more option, like I was saying before. With Coinbase, they have selected quite carefully the cryptocurrencies which have the most likelihood of increasing in value consistently, whereas Binance, they kind of have a lot more to choose from that can offer big rewards but also horrendous losses. So a lot more volatile in some of these assets. But again, if you kind of know what you're doing, or if you're wanting to learn how to trade, then this would be a great platform for you to begin with. And if you wanted to take it to the next level, I'll show you that on another platform. And it's as easy as choosing whichever one you wanted to purchase. So let's just say that we wanted to buy this asset here, ADA, and swap it for whatever amount of BTC that we had. Okay, so you go down here, you choose how much Bitcoin you're willing to spend on the ADA. I don't think I've got any Bitcoin available, but if I did, I could say I want to buy half of my entire Bitcoin worth and exchange that for ADA. I would simply press buy, and the price that has been put in is how much in what's known as a Satoshi value. So how much Bitcoin, or how much ADA would be worth in Bitcoin, which would be a fraction of a Bitcoin, because Bitcoins are very expensive and the vast majority of these other coins are quite cheap, so they have fractions, or what are known as Satoshis. Each number, each one is known as a Satoshi, so this has the value of 1,299 satoshis. I'd press buy if I bought it at that level, and it was at that level right now, which it is at 1297 at the moment. I would certainly get that because I'll be offering more Bitcoin than it's actually worth at the time, as it's gone down a little bit since we clicked on this. So that's the basics of how Binance would work. And again, this isn't for the faint-hearted. This is something that you'd want to use if you were willing to commit to learning to trade a bit more. I wouldn't say this has got anything to do with investment. This is much more of a trading platform than it is anything else, but it carries less risk than a leveraged or margin trade, even though you can do all of that on here. We're just talking about the spot, which is exchanging token for token. There is less risk in doing that than there would be in margin trading, which I'll get onto shortly. Now again, you can margin trade within Binance. I've never done it because there's way too many options to do it, and again, these, as you can see, these assets are extremely volatile. If you make the wrong decision, when you leverage trade, you could lose everything to a zero balance, not have a single token left, not have a penny to your name. So that is what I'll get onto next. But again, Binance is a very reliable and highly liquid, which what I mean by that is that there's a lot of people using it, so you generally will be able to fill your required amount. On some of these exchanges there's not that many people using it, so if I wanted to buy ADA or ADA for Bitcoin, I could put in that price and I might not be able to get it all because there wouldn't be enough people selling it to you. Whereas on Binance you generally don't have that problem. There's that many people selling, buying and selling, that you can pretty much exchange whatever you want by however much you've got. So it's good in that respect, and that's why I would say that Binance would be the place to go if you're looking to exchange token for token. Now what I'll show you now is about margin trading or leverage trading, and the website I would use is called Bybit, and again you can Google Bybit, but I will also leave links below for you to use if you feel uncertain about what Google brings up, because you don't want to be frauded by a phishing website. Now what this is, it carries a lot more risk than spot trading, and certainly way more risk than just simply investing. So, but obviously as a result of that, if you kind of know what you're doing, or you're feeling a little bit more confident, you can make substantial amount of money very, very fast. Now the way that this works is, what I would be doing is, I just on this account here I have 8,832 XRP in this account, and if I wanted to, I could say I believe this is going to go up to this amount here. So just a simple little move which would gain absolutely next to nothing in their value if I was using that as an investment. But if I wanted to, I could add leverage to that, and by adding leverage, what I'm doing is I'm borrowing 5 times more than I own, and I would be selling it if it hit this level here. So as an example, what I'll show you what that would look like. 5 times the value of my XRP would be 43,862. Now what this would do is would mean that because I'm borrowing it from the broker, I suppose you could call it, as Bybit, I'll be borrowing 5 times more than I actually own. If this goes up in value, it goes up in value because that's how much I'll be trading with, rather than the measly just short of 9,000 XRP that I actually own on this account. So that could be great if it goes the right way. If it goes the wrong way, it actually would go the wrong way in such a horrendous way for me, because not only would I be losing the value, I would actually be losing the amount, because I'm borrowing. So if I'm losing the broker's money, I will actually be having to pay for that out of what I actually have. So rather than my XRP going down in value, I would be losing that amount. This, like I say, is not for the faint-hearted, and I would probably say stay away from this unless you have at least a couple of years of experience, and even then using something like a 5x leverage is usually way too high for even myself. I just use that as a figure to show you how it works. You could even go up to 50x leverage, which would mean that I'd be trading with, well, I mean, what is that, 400 400,000, or is that 4 million? I can't really tell. I need to put my glasses on. 400,000. I'd be trading with 400,000 XRP, which meant that if it went the right way, I would be making huge profit. But if it went the wrong way, it would be horrendous. So the way that this would work, and I'll bring it down a notch, just to a 2x leverage, which means I'll be just borrowing, the double amount that I've got in my available balance. If I thought that this was going to go up, for example, I would say buy long. It would bring up this and tell me where I would like to take the profit. Now, to be safe, I would say I would like to take the profit at 21 cents exactly. Now that tells me here that I would make an estimated 67 XRP. It would also tell me in here what would happen if it went the wrong way. Now, estimated liquid price, which is what that means, is that this is the price that it would have to go down to for me to lose every single XRP that I have in my existing balance. So that's, you think to yourself, that's not actually too bad, but given the nature of cryptocurrencies and how volatile they could be, that is still quite risky. It could happen, all right? So it's always worth putting in a stop loss. So, and again, this is for the seasoned traders, all right? This is extremely risky stuff. So what I would suggest is always have a stop loss in. Risk management is key to making money. Always be prepared to lose some to gain some. And like I say, this is definitely not for a beginner, absolutely not. And again, I am no financial advisor. This is by no means financial advice. It's just a brief tutorial on how to go about using a margin traded account. You can make an enormous amount of money from doing this, but you could lose absolutely everything as well. So by using a stop loss, I would say that I would be comfortable in losing a certain amount. Let's just say if it went down to 20 cents, I would lose 817 of my XRP. So if this went the wrong way and it went all the way down to 20 cents, I would lose that amount, and instead of having 8,817, I would actually only have 8,000 left. It would be gone. The rest would be gone. It would be gone to Bybit, or it would be gone to these other people buying and selling. It wouldn't be mine anymore. I'd have less XRP, and as a result, less fiat currency, less pounds, less dollars. So again, this is the best way to make the most amount of money the fastest, but it's also the best way to lose everything altogether. So extremely risky business. I do not advise using it unless you kind of know what you're doing. You'd have to be relatively confident, and you'd have to employ some strict trading rules for yourself. Like, risk management is key. Always have that stop loss in, and always have a take profit in. The problem with these is what I often find for most people, and this is a statistic, most people will lose money on this. The vast majority, in fact, I think is up to 90% of people will lose money doing this, because it exploits the natural greed that you have as a human. You're always overreaching, you're always looking for more, always thirsty for more, and it feels a lot like gambling in a way. Similar to what we saw on Binance, you have the chart set up here, so you do have a quite a good variety of tools and indicators to go by, but again, at the same token, a wrong decision ends up a lot more painful in this respect. So I wouldn't advise doing this unless you've got several years of experience, and more than that, not just experience, good experience. And you really need to do your homework and get used to using these tools, and be very careful about how you do it. And if you don't do your homework, you will lose your money. It will go. And like I say, I'm not a financial advisor. It's not financial advice. This is just a demo on how to use these tools. But this is very, very dangerous, and I rarely use it, to be honest with you. I only use it when my confidence in a move is that high that I will do it. Even if you have stop losses in, if the market decides to completely collapse into itself, you still, that stop loss may not actually trigger correctly, because the way it does work is that it works similar to the way that Binance works, is that you're looking to sell or buy from other people. So if the market is going down steeply and we're losing 5% in a minute, which can happen, nobody's going to want to buy that from you. Your stop loss might not be triggered at the level that you've put it at, because nobody's going to want to buy in a downwards market that's going down that fast. So that even with good risk management, you can still lose a lot of money. So again, this is the best way to make the most amount of money the fastest, but it's also very, very risky. Anyway, I hope this was useful to you, and if you have any questions, leave me comments and I'll get back to you. All the links are at the bottom if you want to bring up these websites and set up your accounts. There's perks for you if you use those links as well. So whether you decide to invest, trade, or leverage trade, margin trade, you can make an enormous amount of money. Every single investment carries risk, and cryptocurrency is just as risky as any other investment. It's a lot easier to do than the vast majority of investing, which is why it's becoming more popular to do it. You can do it from your phone, you can do it from your computer. Really, really easy to do it, and that's why it's gained a lot of traction recently. But again, there's no such thing as magic beans. You don't necessarily think that just because you've bought your cryptocurrency you'll be able to retire in a year. It doesn't work like that. The chances are you will make a bit of money. There's also a good chance that you will lose some money. Again, I'm not a financial advisor. This is definitely not financial advice, but I wish you the best of luck, and if you have any questions, leave me comments and send me messages. Join my Telegram chat, join my Twitter, and I wish you the best of luck.